Good morning, good afternoon, and welcome to the latest ADM Agriculture YouTube grain market update. Well, it's been a very volatile time over the last few weeks, and our national wheat trader, Freddie Humfrey, and I are perhaps going to walk through some of the key highlights. From a pure fundamental point of view, we continue to see issues around the world with production problems in some of the key exporting countries. Certainly the global corn and wheat S&Ds continue to contract, and in some cases we're concerned that we see balance sheets falling below pipeline requirements. Certainly in the US, we continue to see issues with the winter wheat crop and the planting conditions in the north for the spring wheat crop, and indeed in Canada are areas for concern. Dry weather in the EU likewise is causing some concern, and France in particular is looking challenged. And further afield in India, which at one point we hoped would potentially have an exportable surplus that could help the global balance sheet, is now in a very different place with drought conditions taking their potential exports well out of the equation for this upcoming season. So overall, we have a very tight balance sheet. But recent news, of course, out of the Black Sea has changed the complexion of the market, and talk about Russian humanitarian shipments being allowed out of the region has the market on the back foot, and we've seen a sharp sell-off in prices in recent days. Now, whilst the fundamental view of the market still may look tight, for now, prices seem to be on the slide and we're well off the high. I think perhaps it would be interesting to look at things from a technical point of view. And Freddie, how are prices looking? Maybe we use the London wheat market as a reference.
Yeah, thanks, Jonathan. It's quite interesting how we see this overall global price market and price action moving aggressively higher over the last 6 months. So we've got London NOV 22 daily on the screen there in front of you, and you can see that long-term uptrend. Now, more recently, since we had the most aggressive recent rally from the 22nd of April through to the recent high and the all-time contract high at 360, we've had a really nice and interesting Fibonacci retracement that you can see on the right-hand side of the chart. So primary targets we saw on that Fibonacci retracement were 330, 320, and now we're approaching 310. It's been a real significant pullback of approaching £50 now. So some significant levels from a Fibonacci perspective on a technical analysis. And if we break that 310, then we would certainly expect 300 as a psychological level to be on the target horizon, but potentially a full retracement of that late April through to the high move. I think just one thing to add on there, you can see we've got ATR, the yellow graphic, and that's average true range, just really representing how that volatility being led by the market is back to its Ukrainian invasion by Russia, and back to those sort of highs of circa £9 a day. So some interesting technical levels to note there.
Yeah, absolutely. I think technically this market certainly seems to be taking a breather and on the slide, and the seasonality as well also coincides with the historical seasonality market trends, with June often being a time when markets slip back ahead of harvest. So it does play out, but we still have this bullish fundamental that underlies the market, which is creating quite a lot of uncertainty and price volatility. So lots of questions and perhaps not too many answers in the short term. Again, we really appreciate you tuning in and watching our video today. If you have any questions, our contact details are at the end there. Please feel free to get in touch. Thanks again. Thank you, Freddie.
Thanks, Jonathan.